Hello, friends, and welcome. I'm in Puerto Rico right now, and I wanted to shoot just a very quick video. There's been a couple of pieces of news around Bitcoin ETFs that I want to clarify. There's been a lot of misinformation out there that I want to clear up. So first things first, the Winklevoss twins ETF was denied. Now, for those of you that have been with me for a while, know that I've always said that I've been doubtful that the Winklevoss twins, that their ETF would be approved. In fact, I said it probably will not be approved. And that's exactly what has happened. And the key thing that the SEC is concerned about is manipulation, because the Winklevoss twins ETF is based upon the price of Bitcoin on exchanges, right? And I'll explain why that's important in a minute. Where you pull that price data from is important. And so the Winklevoss twins would be pulling that price data from the Gemini exchange. The SEC says, look, most of the trading volume happens overseas. We think that there is a lot of manipulation in the space, and we think that investors won't be able to trust the price of the ETF. So that's kind of old news that at least I already knew was going to happen. The market seems to be a little bit surprised by it. Bitcoin sold off a little bit down to $7,900. But for the folks that I speak to that manage large amounts of money, none of them were expecting the Winklevoss twins ETF to be approved. So that was the first piece of news. The second piece I want to talk about is earlier in the week, the SEC basically pushed out 5 other ETF applications. And I want to make clear that this was not the CBOE/VanEck SolidX application. These were other applications that had been made. The VanEck and SolidX application that has the support of the CBOE has been left untouched. So now this leads us to the question, why do I think the VanEck/SolidX ETF will get approved when 5 ETFs have kind of been backburned by the SEC and the Winklevoss twins ETF has been shut down? So there's a couple of key reasons, right? So one is the fact that the CBOE has been willing to change their rules and modify a filing and basically put their name and their credibility behind this ETF. Yes, it's VanEck's ETF. Yes, it's SolidX's ETF. But the fact that the CBOE is willing to pledge their credibility is huge. And the SEC, if the SEC is going to approve an ETF, and I believe they will, then you have more political cover if you approve an ETF that's backed by an institution such as the CBOE, versus a couple of kids that made a lot of money on Facebook, and that's not me saying that, that's the way that the institutional thinkers at the SEC, I would imagine, are thinking about the Winklevoss twins. So that's one, you've got the CBOE. The second piece is that the CBOE product is going to be insured, which none of these other products are. So if a key is lost, if there is a hack, if there is malfeasance of any kind, the investors in this ETF will be made whole. And that's huge. Investor protection ultimately is what the SEC mandate is all about, right? Protecting investors. And the third piece really drives at the heart of this manipulation fear that the SEC has. You see, unlike the Winklevoss twins, the data that this ETF will use, the pricing data, is based on an index. It's based on the MVIS Bitcoin over-the-counter index. Now that term, over-the-counter, is very important. A lot of big trading of Bitcoin happens over-the-counter. It doesn't happen on exchanges. So what does over-the-counter mean? Over-the-counter means I call another person who I know is either a big buyer or a big seller of Bitcoin and says, hey, I want to buy some Bitcoin. They sell me some Bitcoin. Somebody says, hey, I want to sell some Bitcoin. Okay, I'll buy the Bitcoin. These types of things happen off exchanges, and they happen on things that are called OTC trading desks, over-the-counter trading desks. So let's say if I want to buy, $5 million worth of Bitcoin, I'm not going to do that in the open market because it's going to move the market too much. So I might call an OTC trading desk and say, look, I'm interested in buying $5 million worth of Bitcoin. Try and find me a buyer. And then they will go to their list of clients, find a buyer, and then do a transaction. So the advantage of using OTC data is that, generally speaking, the transactions that happen over the counter are real, right? They're not manipulative in nature. You're not painting the tape when you're doing OTC transactions. But that can happen in exchanges. Exchanges still can, pricing can be manipulated. There's still huge discrepancies between different exchanges. So the OTC pricing market is a more trustworthy pricing model for a vehicle such as an ETF to be based on. It sounds like a small distinction, but it's actually a very big distinction and a very important distinction that the SEC will not be able to ignore. So in summary, the VanEck, SolidX, CBOE product basically offers institutional credibility, it offers insurance, and it offers pricing that is not as easily manipulated as exchange pricing, right? Using this OTC pricing data and a collection of OTC pricing data will lead to a much more rigorous approach in pricing this ETF and making it far less likely that the price of it can be impacted by manipulation. So hopefully that has cleared up some of the questions and some of the confusion that has been surrounding the last couple of days with the various announcements we've seen by the SEC with ETFs. If you have any other more questions, concerns, comments, obviously we can't answer personalized individual questions, but we will do our best to answer them in a general way. All right, friends, that is enough out of me, and I want you to always remember, let the game come to you.